Welcome back to my channel. So today's topic is liquidity grab. I'm sure many of you used to hear this word liquidity sweep, you used to hear turtle soup. Well, I want to show you how it works. It's when you see it, then your trade will be sweet because market has gone to go and grab, price has gone to grab all the money in that location. But now this video, I want to show you how you can trade it, how you can trade the liquidity grab to your own favor. Now, normally we know our institutional reference point when we market does this. Market does a higher high, higher low, higher high, higher low, higher high. Now, when market is coming to internal range liquidity, we know it's coming for our fair value gap or order block, right? But sometimes market just come down and break down here, but it's not break with a body. Then to go back up here, it will go back up and take you out. And you'll be wondering, what's going on? Why did this happen to my trade? What's happening? Well, nothing happened. What happened in your analysis was what they call liquidity grab. Markets came in, took liquidity in here, in this direction here. I'm going to show you because in the market yesterday, there was a liquidity grab. There was a liquidity grab. People that know how to trade it grabbed it. There was a liquidity grab on that was yesterday. Now, market did a higher high, higher low, higher high, higher low, higher low, and it broke down with a week. Sometimes it go down with a week, and you see it just come back up again, and you'll be wondering, what did I do wrong in my chart? How do you trade this when you see something like this? Market had broken in, then there was like a swing, like a form of a swing point has been created. You know how swing point is being created, a 3 candle sequence. On the 4th candle, you go down to your lower time frame, you look for a shift in market structure for your entry. Example, I want to give you a perfect one. I took me time, like yesterday was fun for me because I just started this chart and I was like, this market is crazy. Well, I'm still learning. We learn in trading every day by day, and you keep learning and you keep being liquidity. You also try to avoid being a liquidity in the market. Now, you observe here that market shifted structure here. There was a structural shift here. Can you see it? And market came down here, but market did not come back up here. You can see it. We had two forms of liquidity here. There was one here that market came to grab because why? There was a break of structure, internal break of structure. I would take this as a break of structure because of the weight of this candle. The weight of this candle, meaning there were a lot of buyers here. So I'll take this as a what? A break of structure from this inner swing point here. And what was I expecting? I was expecting market to come in here, touch this order block. My target was around here. This was a full order block of the swing point, but I'll be targeting around here. Market to come and touch this order block and go back up to continue right around this order block, or maybe a fair value gap around here. What the market do? Instead of market to come and touch the order block and start moving up, you are very observant. Market came down here and closed with a wick. Can you see this? Markets came down here and closed with a wick. Now, when I saw this happen yesterday, I was wondering and I was looking at it. Okay, what's going on? What's going on? I was just looking at the chart. I was like, okay, let me see what happened with the swing point. When it closed, another one happened here, and this candle a bit was about going up. Then this one came with the momentum. What you can do in the situation like this is you go down to 1 hour. That's what I did. When that candle closed with a wick, I went down to 1 hour and I was waiting. What was I waiting for? I do swing trading majority of the time. I was waiting for market to come and break this swing point here, our mitigation block. Can you see that? Now, what am I showing you? Market took out what? This is the liquidity sweep here. It's a very nice way if you know how to use it. Anytime market take you as liquidity sweep, don't feel bad. Don't feel bad. Just go down to a lower time frame. Go down to a lower time frame and wait for a shift in market structure. There was a shift here, so I was so confident in the trade. I was like, okay, since a shift has happened, I started looking for my institutional reference points. I found my fair value gap here. And what did I find again? I found my order block here. If I entered the mitigation block, my stop loss would not have made sense. But when I drew my Fibonacci from the high to the low, it was only the other block that made sense to me. So I put my limit here and I went to sleep. I was surprised I woke up in the morning and I was already in the trade. But this is how you trade liquidity sweep. Now, if you go around your chart, let me show you another one. This is going to be a very good trade because while liquidity has been grabbed on a higher time frame, so I'm looking for market to sweep around here. And that form of liquidity will be swept because why? Markets came for this SND, that's another block, but it's called SND. I'm expecting it to sweep up here, but I don't know how the market will play out. We're not the market makers. Now, if I come down again to my chart again, what am I saying here? I will look for liquidity sweeps and I'm going to show you how you can use it to your advantage. Let me keep looking for one for you. Now, if you look at this chart very well, right? Can you see this chart very well? Let me delete this whole section here. If you look at this section, there was a break of structure here. Can you see it? There was a break of structure here. So entirely, you are in a range, not even this section. Let me show you another good example again. We are coming back to that one. There is 2 liquidity sweep in this whole area like this. This whole area, there was liquidity sweep. Now, there was a break of structure here. This swing point, the lowest, this is the longest point the market came in here. I will drag my point here as a break of structure. I'll put my sign as a break of structure. Sorry, break of structure. Now, what are you seeing here? Now, we are going to mark this whole zone here at institutional reference point. Can you see it? The market should have come into. There was an order block, but there was no fair value gap, or neither was there liquidity void. So markets came here. Now, if you look at this situation here, what happened in this area? I'm going to put a line now. In this area, I will go down to my 1 hour. No, or I'll go down to 15 minutes. But in 1 hour, when markets swept that liquid, like I said, do not feel bad that, oh, I've lost my trade. As long as it has closed with a wick, you will just go down to a lower time frame and be looking for a shift in market structure. The moment market shifts market structure, you're looking for your next institutional reference point. Are you seeing? Let me tell this as 1 hour. Shift market structure. The next question we're asking yourself: is there an order block? Is there a fair value gap? I just used to actually use order block and fair value gap to reduce my stop loss, but you can check other ones: breaker block, mitigation block, liquidity void. And what did I have here? I have order block here. And you can put your point here, put your stop loss here. Market has grabbed liquid. Anytime you see grab liquid, that trade will be a very delicious trade. And this is short. Put my line here. Whenever market take you out, liquidity grab, do not feel bad. It's coming back. Put my line there. Can you see it? I put my line there, and I'll be targeting this next low because I know liquidity has been grabbed here. So market wants to come and take in a liquidity inside here. Either I can put my stop loss around here, or I will target this low down here. That is one of the liquidity, right? This is a good trade, 1 to 6. Now, if you look inside here, there is a range. This is also a 4-hour structure. You can see it, right? This is a 4-hour structure. But also, look at this area here. There was a what? There was an order block here. Before market came and did this internal drama here. There's also a structure here, but there was an internal order block here with a fair value gap. Now, the fair value gap is around here, right? But if you look at it very, very well, before it got the fair value gap, what happened? Market took out this liquidity. Can you see it? There was a liquidity grab in that area. I will go down to my 1 hour. On my 1 hour, what am I seeing? What are you seeing on 1 hour? There was a swing point being broken here. There was a swing point being broken here. But also, this is almost like a mitigation block because why? There was a break of structure here. Right? Market did not break the structure around here. But also, it also created a form of BOS. But if you're not seeing any good structure in this area, you can come down to 30 minutes. If it comes worse to worse, you can try 15 minutes. If you cannot see an entry in that area. On 15 minutes, what happened on 15 minutes? There was what? There was market did a shift in market structure here. Can you see it? And what am I seeing here? I'm seeing a swing point here. Can you see? That is a breaker block. And you can take your entry from there. You just put your long position, breaker block. This is on 15 minutes actually, but I do take my trade from 1 hour. Then you target the next high. And this will be a good trade for you. Liquidity sweep. The same thing happened here also. Liquidity sweep. It's on the chart if you know how to locate it. When you just see it like this, just be happy that your market is going to go well because it's a good trade. On 1 hour here, liquidity sweep, right? This is the sweep that happened here. If I go to 15 minutes on a lower time frame, it doesn't matter the time frame you use. If I go on 15 minutes, I can see there was a shift in market structure. And what happened? Market just tapped the what? The breaker block here. Market just touched the breaker block. You can see it here. Market just moved up, came and touched the breaker block and continued in its journey. The same thing goes to 4 hours. It depends on the time frame you want to use. 4 hours, 1 hour. When you see a liquidity sweep, know that that trade is going to go well. Like, it's a good trade. Example here also, there was also liquidity taken out here. But majority of the times, our liquidities around. When you see liquidity sweep, let me try to find one for you. Well, if you go around the chart and play with the chart very well, you know when to locate when market has done a liquidity sweep in the market. You go down to the lower time frame, look for a shift in market structure and enter it. Whether your fair value gap, order block, or liquidity void, breaker block, or mitigation block. It depends on how you want to enter your trade. Don't forget to subscribe to my channel, ask your questions. I try my best to answer questions as much as I can, and thank you very much.